$250,000 Bitcoin, $100,000 Bitcoin, $1 million Bitcoin. Those things are much closer than they appear because of the realities of this accelerating debt problem that the United States is facing. If we end up going with the Bitcoin Act of 2024 and we do end up buying 1 million Bitcoin over the course of 5 years, that would be absolutely massive for the United States. But all Trump needs to do on day one is sign an executive order, basically reestablishing our existing 200,000 Bitcoin as our strategic Bitcoin reserve. The headline of that alone is enough to send Bitcoin blazing right past 100K again towards $110,000, $125,000 in really short order. We're basically in a Bitcoin cold war right now. We're waiting on the other guy to press the button and start accumulating Bitcoin. And once one of them does, then all of a sudden it's off to the races and it's a Bitcoin arms race to accumulate as much Bitcoin as fast as we can. It's going to be a very wild 2025. It's tough to see how Bitcoin ends the year anywhere lower than like $150,000. Monetary debasement is the path of least resistance in order to fund the US government. As a result, you want to own the best hedge against monetary debasement. And time and again over the last decade, that's been Bitcoin. If gold is $30 trillion by the time Bitcoin usurps it, then Bitcoin is $1.5 million per coin in the next 5 years. Bitcoin is inevitable because we can't stop printing money. The prospect of Donald Trump saying, all right, the United States is now going to be buying Bitcoin actively, that's going to be much more widely publicized, both on right-wing media and on left-wing media.
Before we start in the whole topic of a strategic Bitcoin reserve and all the things that we kind of want to discuss today with markets, before I want to ask you, what in general do you expect from 2025? How do you look at this year, this coming year, and what do you kind of expect for that?
Right. So, I mean, it's going to be a banner year. It's going to be another banner year for Bitcoin, right? 2024 was fantastic. We went from, at the start of the year, sub 40K to, 98K ending the year, right? So we rose, 200%. I have a feeling that we'll do a very similar thing this year. If you take a look at upside targets like $150,000, those aren't very far out of reach whatsoever. Obviously, Bitcoin right now is really struggling to get back above 100K. That's just a function of what's happening in the broader economy and with interest rates. Economic data is coming in very good. As a result, growth expectations are rising, interest rates are rising. And so the cost of capital, right, the cost of borrowing and lending across the US economy is rising. And so it's making it harder to do business. As those yields get more attractive, people are selling risk assets, buying treasuries, right? So that's what Bitcoin is facing right now. That's the one big headwind. But I believe that once Trump gets into office, he's going to use that kind of like a negotiation tool of sorts with other countries. And also with the Federal Reserve, right? We have this very strong economy. We have yields through the roof. And he's always been somebody who, even when the economy is hot, he wants rates to come down even more. During his presidency, he's notorious for telling Jerome Powell over Twitter that rates need to be negative. They need to be cut below zero. So I expect more of the same because ultimately that's what Trump cares about more than anything. He cares about, the American people, but he also cares about the U.S. economy as measured by GDP. So he wants that thing to rip for all 4 years of his term. So he has something to brag about. So I think that once Trump gets into office, yields will probably come back down. And then it will be a better day for risk assets, Bitcoin included. But for the time being, Bitcoin is kind of attempting to scale this wall of spiking yields. And it's not doing a very good job at it.
It's interesting because before, no president really was big on Bitcoin. He's kind of the first one that is at least speaking a lot about it. And there's always this midterm election thing. I'm not an expert of American politics, but I have a feeling that the midterms are also really important. So all 2 years. And when you follow the Bitcoin cycle, midterms, Bitcoin usually crashes in that time. It doesn't have to be, but maybe he really wants to prevent that with low interest rates, with a lot of money supply. Maybe he can manipulate the market in that area to the upwards. But yeah, that's just an interesting thought that I had right now. That's really interesting when we think about now nation states coming into the game. Just like 4 or 5 years ago, we had the first publicly traded company coming into the game. Now we have a lot of them. What do you expect for the strategic Bitcoin reserve and maybe nation state game theory kicking off?
So it's really incredible, right? 4 years ago now at Bitcoin 2021, obviously Nayib Bukele of El Salvador announced that they would be buying Bitcoin. They made it, legal tender. And as a result of that, they would have a reserve of it. They're buying 5 every single day or 1 every single day, whatever it is. And they've been doing that for the last, coming on 4 years. So they're the first nation to do that. Obviously, at the time, it was a little bit outlandish. It was, right after Bitcoin had risen all the way up to 60K and then crashed back down to 40 or 45. And now you fast forward, not even 4 years on, the Kingdom of Bhutan is revealed to be one of the largest Bitcoin holders. Obviously, we still have El Salvador. Russia now is speaking about establishing a strategic Bitcoin reserve in response to the United States rumors of the US SBR. And one thing I know about Trump, and everybody knows about Trump, is he's a very competitive guy. If you whisper in his ear that Vladimir Putin is going to buy all the Bitcoin before you, he's going to want to buy all the Bitcoin before him, right? So that's basically what we're facing now, is the prospect of, obviously, look, the U.S. fiscal situation is extremely dire. We're running a debt to GDP ratio of, close to 120%. We're running deficits that are, going to be closing in on $2 trillion annually by the end of this year with the way that interest expense is running so high. We have a deficit as a percentage of GDP of 7%, which means that if we kicked out the entire deficit, if we stopped spending more money than we have, the economy would crumble. And so we're in this really precarious situation where we rely so much on debt. The U.S. has needed Bitcoin now more than ever. If we end up going with the Bitcoin Act of 2024, if it gets passed resoundingly by people on both the Republican and the Democrat side, and we do end up buying 1 million Bitcoin over the course of 5 years, holding it for 20 years in order to attempt to pay down some of our national debt, that would be absolutely massive for the United States. But even without the Bitcoin Act of 2024, I still think it's possible for Trump to establish a strategic Bitcoin reserve. For viewers of your show, a lot of them may already know this, but some of them might not. The United States is already the country that holds the most Bitcoin. We have 200,000 Bitcoin being held, and that's from seizing them from criminal operations, or they were said to be criminal operations like the Silk Road, obviously, and other various things, asset forfeiture. And now we have 200,000 Bitcoin. All Trump needs to do on day one is sign an executive order, basically reestablishing our existing 200,000 Bitcoin as our strategic Bitcoin reserve. And then just like that, we have a strategic Bitcoin reserve. The headline of that alone, right, is enough to send Bitcoin, blazing right past 100K again, towards $110,000, $125,000 in really short order, if he decides to do that. If he does, see friction with trying to pass the Bitcoin Act of 2024. He could also use the Exchange Stabilization Fund framework. This is something that Matt Pines and the Bitcoin Policy Institute have spoken about. Is basically using the existing framework of this Exchange Stabilization Fund in order to purchase Bitcoin, right? In order to sell the gold we have in the Exchange Stabilization Fund and purchase Bitcoin with it. He can do that with executive order on day one. And the Bitcoin Policy Institute has actually already drafted the executive order that he could use. It's literally plug and play. All he has to do is take what they've already written, plug it in, sign it, and we have a strategic Bitcoin reserve on day one. So even without the Bitcoin Act of 2024, the prospect of this is looming. And so not even just, let's take a look at the second order effects, not just price implications for this thing. What about game theory? You asked about game theory. Well, we know Russia, China, India, and several others now are trying to create this basket of currencies so they can do trade in a currency that is not dollars. We know that gold is not the currency they can use to back that basket of currencies. They've already spoken about the shortcomings of gold, how because it is physical, it would literally be impossible to settle trade in gold. It just cannot happen, or have their currency backed by gold. But this committee, right, this BRICS committee, has brought up the prospect of using Bitcoin to back this basket of currencies. And so while I myself am a bit of a dollar bull, right, I believe that the dollar is going to continue to trounce all fiat as it has for the last 80 years, over the next 80 years and 100 years. I do believe that, while it is the king of fiat, it's the king on top of the trash heap, right? All fiat is inevitably going to die on the vine. And really, I think, at the end of all this, the dollar will remain king. That said, the prospect of some of the world's strongest countries that are ancillary to the United States, that are not the United States, purchasing a lot of Bitcoin in order to back this brand new currency they're trying to create, is pretty enticing. It's a very interesting prospect. And you couple the dynamic of both sides, right? Basically, the United States and its allies wanting to purchase Bitcoin for itself, and the United States enemies, right? China, Russia, and the like, wanting to potentially adopt Bitcoin. It's essentially like we're basically in a Bitcoin Cold War right now, where basically we're waiting on the other guy to press the button and start accumulating Bitcoin. And once one of them does, or once the prospect of one of the countries buying Bitcoin comes to such a fever pitch that the other side can't help but buy it for themselves, then all of a sudden it's off to the races and it's a Bitcoin arms race to accumulate as much Bitcoin as fast as we can. And Robin, you and I know this is the reason we're in Bitcoin. It's because these central banks have infinite balance sheets. The money printer does not run dry, it runs forever. And so they have this infinite money printer to buy as much Bitcoin as they possibly can, right? Thus making the denominator more worthless, driving Bitcoin's price up as a result of that. And then also using that to stack more Bitcoin, driving Bitcoin's price up in its own right. So it's going to be a very wild 2025. I don't think people are bracing themselves enough for that. Obviously, there are several risks, macro risk factors this year, but largely everything's looking good on the Bitcoin native front. Bitcoin generally rises for 3 years and then falls for one. 2025, it's slated to rise as a result of that. The macro backdrop is very, very supportive for that to happen. And you also have the prospect of nation states, the world's superpower, the United States, buying Bitcoin. So if you just put everything together, it's going to be a really banner year for Bitcoin. And it's tough to see how Bitcoin ends the year anywhere lower than like $150,000.
Interesting. This year seems to be really hard to find something negative on Bitcoin, but you mentioned there are some risks to the adoption in 2025. What are those?
Yeah, for sure. So obviously you have the prospect, the biggest risk factor is that like none of this happens. Like the SPR never comes to be. Trump was just, lying in order to get votes from the Bitcoin cohort, in order to get votes from the libertarian crowd talking about Bitcoin. Like that never happens. BRICS falls apart. Nation states don't actually accumulate Bitcoin. Okay, that's one risk. The other risk factor is like the economy just totally falls apart. For me, that isn't a huge risk factor because everybody in the audience knows that the Fed is really quick to respond to times of crisis. And the only thing that they ever respond with is the money printer. So, for example, back in March of 2023, when Silicon Valley Bank happened, basically when there was a run on the bank and it had to sell some of its U.S. treasuries, its impaired U.S. treasuries, it wasn't able to meet all of its obligations and it went bankrupt as a result. Basically, overnight, what the Fed did was it created an emergency facility to prevent that exact same problem from happening at other banks. It created this thing called BTFP, the Bank Term Funding Program. Basically, it allowed all of these banks who were holding impaired U.S. treasuries, rather than having to mark them to market at face value in order to meet their obligations from people who are trying to get their money back, basically it let them go to the Fed and value them at par and get a loan on that. So yeah, let's say, for example, the Fed hiked interest rates all the way up from 0.25% to 5.5%, which is exactly what they did. As a result of that, you have all of these losses due to duration or interest rate risk on the price of these bonds. Obviously, they're still being held. These banks aren't selling them for cash, but in the event that they do need to sell them for cash, they're going to lose a lot of money. And so this is basically called unrealized losses, or realized losses when you have to sell the security. And so these banks were sitting on these huge unrealized losses on U.S. treasuries because of the Fed's really aggressive rate hiking. What did the Fed do? It made this facility where it allowed banks to take all these unrealized losses and then make them disappear overnight if they wanted them to. For, I believe the period was 12 months or 18 months. And so the Fed is really, the point is the Fed is really quick to respond in the event that something goes wrong, whether it's in the financial system, right? In the case of 2008, whether it's in like interbank lending and U.S. Treasury impairment like 2023. And so I believe that whatever crisis comes around or is on the horizon that could come around in the next year, the Fed will do the same thing, what they've always done. They'll come up with a very unique facility in order to backstop the banks, bail them out by whatever means possible. That gets passed on to the individuals. But what it means is that instead of having a prolonged recession like we had in 2008, the recession, if we do get one, will be very short, very truncated. So that's the second risk factor. And then the third risk factor is, as a result of yields just continuing to rise and rise and rise, and there's no form of like yield curve control from the U.S. government, either via lowering its issuance schedule or actually creating a facility where the central bank purchases bonds from the U.S. government, and yields just continue to rip. People just sell risk assets and buy U.S. treasuries, right? It's really enticing when you have, let's say that the 10-year yield is at like 4.6% right now, the 30-year yield is at like 4.9%. It's really enticing for most people to say, look, I can just buy the 30-year US Treasury bond, get 5.5% or 5% every single year. And it's getting to the point where it's so enticing that people are going to sell risk assets. And that's basically what's happening right now. If you take a look at this chart that I just tweeted, it's the S&P 500 equity risk premium. Basically, it's the difference between the 10-year US Treasury yield and the forward earnings on the S&P 500. It's negative for the first time since 2002, which means that the 10-year US Treasury yield is more attractive than the forward earnings on the S&P 500. So what does that mean? Well, it means that treasuries are more attractive than stocks. And so people are going to sell stocks and go into treasuries. And that's basically exactly what is occurring right now. And so basically, if you continue to see yields rising, you'll see even more of this dynamic that you could see up on screen playing out. The S&P 500, and this goes both ways, right? Because as yields continue rising and it becomes more attractive, then guess what? That raises the cost of capital for these companies that are in the S&P 500, and so it lowers their forward earnings. And so this is kind of a feedback loop to the downside that makes equities less attractive, U.S. Treasuries more attractive, until yields come down. So that's the other big risk factor. Like this year is just such a great year for the U.S. economy that yields just don't stop rising. Or they continue rising in this really secular fashion like we've seen, and people sell out of risk. That said, I do think that this year is going to be fantastic for Bitcoin. I tend to err on the side of bearish rather than on the side of these risk factors. But we do need to think probabilistically. We do need to factor all this stuff into our analysis when we think about where Bitcoin's heading over the next year.
That's super interesting. So basically the three risk factors is the first one is like SPR not happening, as a strategic Bitcoin reserve not happening on any side, which I feel like it's less of a risk. It's a risk for this year, but it's less of a risk overall because it's just a matter of time when they will do it. And the second one is interesting for me also, basically the economy collapsing, which then, as you said, they will facilitate something which basically means they're starting up the money printer, and which then hyperinflates or inflates the US dollar more, which then benefits, especially price US dollar, Bitcoin, and all fiat prices anyways. And the third one is interesting, fiscally responsible government and trying to be the last one is hard for me to imagine happening, especially with Trump in office. But yeah, keeping all that in mind, I couldn't be more bullish for 2025, but maybe I'm influenced by a daily Bitcoin podcast with a daily bull on the show. But it seems to be a year where it's highly irresponsible to sell your Bitcoin, even if there's some downturn, even if you are concerned about anything. It seems to be like that, just be in that asset and see what's happening till the 31st of December.
Oh, absolutely. And, we haven't even talked about things like MicroStrategy now in the NASDAQ, or MicroStrategy's preferred stock raise, both of which are absolutely massive for Bitcoin. NYDIG also announced that they would be exploring investing insurance float into Bitcoin. And so, not to mention, like, these ETFs have been some of the most successful ETFs of all time, these new Bitcoin ETFs. And so the cohorts that are investing into Bitcoin, it's not just you and me anymore. It's not just these retail investors who are buying spot Bitcoin on Robinhood or Coinbase or River. It's now these extremely sophisticated sectors of traditional finance, both in the equity market, the passive flows, the fixed income market, and even things like insurance flow right now, which are very niche, but very huge pools of capital, like $8.5 trillion, right? So that's discounting all of that. This year is going to be great for Bitcoin. When you factor all of that in, really, the sky's the limit.
Is that maybe, and I know we have the discussion in every bull market, but with the MicroStrategy, with the ETFs, with potential nations, is kind of that market disruptor point where we get out of this 4-year cycle, where we're going to get out of this same thing happening all over with 4 years, and we might have some different movements?
It certainly could be. It could be, because now not only is our Bitcoin buyers coming from far and wide, but the amount of Bitcoin that they're buying is rising too. And so then it begs the question, are the 4-year cycles still something that will be followed. I tend to think that they will be. I tend to think that volatility is decreasing, though, as Bitcoin grows larger as an asset. If you take a look at the percentage drawdown from Bitcoin's all-time high over the last 5 cycles, they have risen from like a 96% drawdown to like a maximum of like 74% during the absolute bear market bottom of this cycle. So because we got to consider at $93,000, Bitcoin is like a $1.94 trillion asset. But at $100,000, Bitcoin is an asset that's over $2.1 trillion in size, which means that it's the 7th largest asset in the world, right? And generally speaking, assets like that are not very volatile. We're talking things like Google stock, Amazon stock, Saudi Aramco, these massive companies, Apple. I think I mentioned Microsoft. So as Bitcoin grows in its size, as it monetizes to 2.1 trillion, and then ultimately the size of gold, and then the size of the entire US Treasury market, and then the size of the S&P 500, and then $100 trillion and beyond, it's just going to get less and less and less and less volatile. But I do think that these new cohorts coming in it's all a part of the 4-year cycle. Generally speaking, this is just the way that Bitcoin moves. It's kind of inexplicable. But then again, basically, no model works with Bitcoin. And my colleague Nick Bhatia explained this really, really well over at the Bitcoin Layer. One of the things he said is that Satoshi totally destroyed economics with no demand response function. Every asset in the world has a demand response function. So if there is massive amounts of demand, you bring more supply online for your asset. You could do it with equities really easily. You could issue more shares. Then just like that, a company is several $100 billion richer. With gold, as gold's price rises, gold miners say, hey, take a look at that. Let's fire up more machines. Let's hire more people. Let's bring more gold out of the ground. The supply schedule increases. So every time the price of an asset rises, the supply schedule for that asset that rises in price. The supply schedule, or the amount of issuance for that asset, rises too. With Bitcoin, you can't do that. If Bitcoin goes over 110,000, the miners can't, kind of work with each other and then say, hey, let's raise the supply schedule for Bitcoin. You can't do that. It's an absolutely fixed supply. And so basically every economic model of supply and demand is totally destroyed with Bitcoin because there's no demand response function whatsoever. And so the 4-year cycle may very well be broken. Who knows? I tend to think that as the US fiscal situation continues to get even more out of control, people are going to start trading Bitcoin differently. It's not just going to be an asset that people buy during great times that they treat like a very speculative asset. They're going to stop trading it like the NASDAQ and start trading it like the apex risk-off asset that it is. Monetary debasement is the path of least resistance in order to fund the US government. As a result, you want to own the best hedge against monetary debasement. And time and again, over the last decade, that's been Bitcoin. And so I believe that the big story over the next several years will be Bitcoin finally trading in the way that its monetary properties outlined in the white paper behind me allow it to trade, which is like this apex risk-off asset that people buy in both good times and bad. And that in and of itself could break the 4-year cycle, but that remains to be seen.
Interesting. How much attention are you paying to Bitcoin price models like, I think, stock to flow and power law is the kind of the more famous ones?
Yeah. So I tend to think that these models can be helpful for understanding some of Bitcoin's properties, but they have very little predictive power. And Giovanni might get on my case for this. I've had him on my show. I think you've probably had him on your show too. He might get on my case for this. But these models have very little predictive power. But one thing they are good at is helping you understand some of Bitcoin's properties. I'll take the stock to flow model, for example. Basically, it literally just models the existing stock of Bitcoin relative to the amount of Bitcoin that's coming online. And then it tries to extrapolate a price target for that. It's helpful for learning that Bitcoin is an absolutely finite asset, and therefore most models for it don't work. And it can be helpful to consider both of those things when thinking of where Bitcoin's price will be. But as far as predictive power goes, they're not very good, right? The power law model is great. But again, like these different models, 1 standard deviation below or 2 standard deviations above, like that's a huge range. Like that's a several $100,000 range between where Bitcoin's price could be. And so while it is helpful for gauging where Bitcoin's going to go directionally, it doesn't have very much predictive power like here and now in the present. And so while I I know about these models. I don't really factor them into my analysis, at least when I'm doing it. What I pay the most attention to is interest rates and the money supply, right? The US Treasury market, influenced by the Federal Reserve, is the deepest and most liquid market in the world. It's the most widely used set of benchmark rates in the entire world, the 10-year yield and the 2-year yield in particular. So as a result of that, I just keep my eye on those things. I keep my eye on those things, and I take a look at the fiscal situation in the United States, which can only be resolved by issuing more debt. With where our interest expense is, that debt needs to be issued at a very low rate. And that's just the reality, which means that basically what we need to do at the federal level is have the yields on our debt lower than the actual rate of monetary inflation to erode the value of that debt in real terms. So basically negative real yields on our debt. Otherwise, we go insolvent. We have currently something like $75 trillion over the next 50 years or 75 years in unfunded obligations, both Social Security and Medicaid, that we need to pay for somehow. And we're not going to be able to do that with rates at a very high level and having to pay that out, right, to investors. Our annual interest expense right now is like $1.6 trillion by the end of this year. If rates go on the path that people think they will, it'll be $1.9 trillion. We can't pay that amount every year and then also pay for Social Security and Medicare without those two things drying up. Politicians will never be elected again if those programs go away. So really, it's just a matter of the US government cannot stop funding itself. It needs to fund itself. And the math just is arranged in such a way that we need to fund ourselves at negative real interest rates. And so the money printing is just going to continue forever, right? That's the reality. And so Bitcoin is like the only asset that you want to hold, right? And those are basically like the cornerstones of my analysis. I tend to not throw around price predictions because of that. I'm a macro thinker, but Bitcoin is going to usurp. My very baseline assumption is that, like in really short order, in the next 5 years, Bitcoin is likely going to usurp the market cap of gold, which is like the current asset that the market uses as a monetary debasement hedge, because it just doesn't serve that function very well. Gold was basically flat for 20 years up until 2023. It's not a very good monetary debasement hedge. Compare that to something like Bitcoin, which performs that function much better. The market is coming around to realize that. And so this informational arbitrage, basically, that early Bitcoin adopters have had, like this little secret that we all have had, that Bitcoin is the best at serving this function of hedging against money printing. It's now becoming realized in the market. And the best way to see that it's becoming realized is the percentage of Bitcoin as a percentage of gold, right? Just from a size perspective. Gold right now is over $20 trillion, or actually right around $20 trillion in size. I think $18.5 trillion, something like that. Bitcoin is now a little bit over 10% of that, right? And so as that approaches 100%, this is just Bitcoin's value proposition being fulfilled into reality right before our very eyes. So my baseline assumption for where Bitcoin is going is in the next 5 years is going to usurp gold's market cap. And it might be gold might be smaller than it is by the time that happens, right? Gold will be getting demonetized as this happens. People will be selling gold and buying Bitcoin. So when these two assets converge, gold may very well still be an $18 trillion asset, and Bitcoin is $18 trillion. But you got to realize that's $1 million a coin, or close to $1 million a coin in the next 5 years. And so that's my very baseline assumption, right? Bear case, that could happen over the next 7.5 to 10 years. Bull case, it could happen sooner than that. But that's generally speaking, like the sole model that I rely on is what Bitcoin is, what it's very good at, and this trend of demonetizing these other assets, namely gold, until ultimately it's larger than that. That's really what drives my analysis.
That's interesting. I always thought of when Bitcoin will catch up gold, that gold will be bigger in market cap because the US dollar will, in that time frame, devalue. But I never factored in that Bitcoin in that process is also actively demonetizing gold at the same point, where there's US dollars flowing into gold, but there's also US dollars flowing out of gold and into Bitcoin directly. That's interesting. I still feel like if we'd say, let's say in 5 years, we catch up to gold, I still feel like, and it's just inflation numbers, but I still feel like Bitcoin, and I still feel like the gold is higher in market cap. Or do you feel like the suck from Bitcoin is so great that the US dollar devaluation doesn't account for that?
I think that this trend we've been on of gold, I tend to err on your side, right? Because over the last several years, again, gold was basically flat for 20 years until 2022 or 2023 or 2021, more accurately. And it's grown in market cap. It was closer to $12 trillion. Now it is $18.5 trillion, right? So I tend to think that that's probably the way things will go. And so that means by the time Bitcoin demonetizes gold may be a $25 or even $30 trillion asset. Because even as Bitcoin comes into the scene as a superior monetary debasement hedge, gold will continue to be treated that way. It will demonetize some of it. So it will pull down that growth rate of gold somewhat. But nevertheless, there will always be people who are investing in gold. There are always people who are going to never come around to Bitcoin as an asset. And so then as a result of that, when Bitcoin usurps gold, it could very well be a $1.2 million asset, a $1.3 or $1.4 million asset. If gold is $30 trillion by the time Bitcoin demonetizes it, it usurps it, not demonetizes, but usurps it as the biggest asset in the world, then Bitcoin is $1.5 million per coin by the time that it catches up to gold, right? And that process could very well happen given the accelerating trend that we're on with Bitcoin adoption with these massive cohorts over the next 5 years. How's that for a soundbite? $1.5 million Bitcoin in the next 5 years.
I already clipped it. No, I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece, and make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I guess you already bought some Bitcoin. And now the most important step is to keep the Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the BitBox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still their Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your BitBox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really wrong. And through all those steps, the Bitcoin way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty. That's really exciting. I think that's good. But one thing I'm wondering, how related is the Bitcoin price in general? Because I never look at those numbers. To the monetary expansion of the US dollar. Is that like where Bitcoin is rising, also the monetary expansion, or is there a lag in between? Did you see those numbers?
Yeah. So I'll actually, if you'll allow me, is it okay if I share my screen?
Of course.
Okay, wonderful. So this is, and you can see this is my Bloomberg terminal. This is Bitcoin in global M2. And Bitcoin is lagging behind global M2 in white by about 10 weeks. And so you can think of this as the global M2 money supply, all of global fiat, all of the global M2 stock denominated in US dollars. And so what we're seeing here is two things. We're seeing obviously monetary expansion, but what we're seeing right now is not so much monetary contraction as it is US dollar strength. Because remember, all of these global fiat currencies in this chart are denominated in dollars. And so dollar strength, in the same way, as yields rise, the dollar gets stronger. In the same way that it's really bad for risk assets, it's bad for Bitcoin. So this chart, it's two things, right? It's the absolute stock of global M2 money, but then it's also denominated into USD. And so in US dollar terms, is the global money stock rising or falling? Right now, it's contracting. But you've seen over the last several years, particularly recently, Bitcoin has a really strong directional correlation to global M2. And again, this is both global M2 expansion and contraction, and also that conversion into USD. So it's basically, it's two things. It's the global money stock and US dollar strength. Both of those two things impact Bitcoin to a very outsized degree. You'll see here, when Bitcoin was a much smaller asset, it tracked global M2 directionally, right? You see that Bitcoin rose massively above global M2, and then it also dipped massively back down below global M2. And this is when Bitcoin was still a sub $2 trillion asset. Here it's a sub $1 trillion asset in this zone. But you'll see that more recently, once the ETFs came close to being online, and basically, TradFi came into the scene, we get more rumors of a U.S. strategic Bitcoin reserve. Basically, the people who are in the Bitcoin market are more sophisticated. Then you see that this correlation started coming much closer to one. It's like almost a one-to-one correlation with the movement of the global M2 money stock with Bitcoin. If you pull it to about September of last year, these two assets, or Bitcoin and the global M2 money supply, basically started moving in tandem with each other. Now, a lot of people will look at this chart and they'll have an issue with it for several reasons. But the reality is, this is very interesting, because the reason basically everyone in the West at least gets into Bitcoin is because it's a hedge against monetary debasement. And what we're seeing here with this chart is a fulfillment of that value proposition in the numbers. Bitcoin is tracking with the global money supply, both to the upside, but also to the downside. And with what I just laid out during our discussion, why the US dollar needs to continue being debased, but also global fiat by extension needs to be debased even more. Even though we're in this period of US dollar strength, it can't last. And so this white line is going to reverse, right? It might reverse this year, it might reverse next year, but the inevitable outcome is this is going to reverse. And Bitcoin alongside it will reverse too. You can see in recent weeks, Bitcoin it's really held its own, honestly. If I look at this chart here, Bitcoin is, really, really trying to break above that 100K mark with force. It just hasn't done it. So it hasn't done it very well, because it's fighting against the reality of high yields, a strong dollar, and therefore contracting global M2 money stock denominated in USD. So it's trying to fight this trend as best as it can. But if high yields continue climbing, and the US dollar as a result remains strong, chances are Bitcoin will lose this battle and be in for a big correction. And so Bitcoin is very, very heavily influenced by the global M2 money supply, especially as of recently. Now, again, I'll hedge my language there. Bitcoin has its own native factors that cause it to rise. You know this, right? We have the halving cycle. We have things like nation state accumulation. All of these things are great for Bitcoin in its own right, but not great for other risk assets. And so that could drive Bitcoin to buck the trend of contracting global M2, just like we saw over here, right? Zero interest rate policy caused this absolutely scarce asset like Bitcoin to rise all the way from like $3,000 all the way up to, $64,000 and then $67,000, right? A very similar thing could happen now, where even though the global M2 money stock is contracting, and it may continue contracting as a result of, again, high yields, spiking yields, strong dollar, Bitcoin could dislocate if we get a strategic Bitcoin reserve, or things like that, or we get other nation state adoption. Bitcoin has its own native factors that influence its price to go up, that are separate from other risk assets. So this trend could very much continue. It could very well continue. This is a scary chart for some, but I would encourage people to look at this chart and be very happy, because Bitcoin is fulfilling its promise as a global money supply debasement hedge. And that sucks when the global money supply is falling, but we know that the inevitability is that global money stock will rise. And so that's fantastic for Bitcoin, who has proven over the last year and some change that it tracks it to a T.
That's amazing, and I think that's exactly what Bitcoin, like what a lot of people always say, like, oh, Bitcoin should be a hedge against inflation, and then a lot of people say like, oh, inflation rise and Bitcoin didn't. So like that's actually an argument against Bitcoin, and here's kind of the proof that Bitcoin is a hedge against inflation, because for me, inflation is monetary expansion, not the CPI.
Yes.
So that's kind of the data proof that this actually is true. And one other thing is really interesting about that. I take a longer route around that. Maybe it makes sense later. When we have now Nostra, and we have Twitter now trying to be more freedom of speech, and now we have Mark Zuckerberg coming out and, hey, we're doing this fact check. There's no longer. I think that's a reaction because there's an exit valve. There's somewhere where people can go. And I think a similar story is with Bitcoin and the US dollar and fiat monetary systems, where when there is somewhere where people can go, this something is kind of the scoreboard of how bad this fiat system is doing. And I feel like that's where we slowly come towards, where we have the Bitcoin US dollar price, which is showing not only the adoption and the growth of Bitcoin, but also the monetary expansion, as you just showed, really nicely. And so when we have a lot of printing of money, a lot of monetary expansion, this Bitcoin thing is more and more this one indicator to show exactly this. Of course, Bitcoin is also growing because more people adopt it, like people are orange billing each other. Marcus Saylor is orange billing, I don't know, Jeff Bezos, and they're coming together. So like those things are also contributing to that price. But a lot of things, I feel like, is the monetary expansion and that white line, as you showed us, going up and in the right, which is a great thing. I like to look at the Bitcoin US dollar price as the scoreboard of how bad fiat is doing. Is that something that you agree with?
I do. Yeah, because ultimately people want a way out, right? People want a way out, especially my generation, right? Especially our generation. Here in the United States, the median home price in 2021 was something like $330,000. Now it's $400,000. Interest rates at the time were close to 2%, 2.5%. And so your monthly payments on a 30-year mortgage with 10% down, $30,000 down, would have been like $1,500. You bring that, and the total repayment amount would have been like $410,000 or $420,000. So only $70,000 more than what you were paying, than what the home price was. You fast forward to today with 7.5% mortgage rates, right, on average across the U.S. for a 30-year mortgage, and you pair that with the median home price now about $400,000 or $410,000. So it's increased anywhere from $50,000 to $100,000. The median home price, and rates are now, 4 times what they were, or 3 times what they were. As a result, now with 10% down, $40,000 down, and with current interest rates, you're paying close to, $35,000 to $4,000 a month for your home that you're trying to live in, and your total repayment amount over 30 years is something like $850,000 for this $400,000 house. And so now in the United States, people my age, they feel discouraged, extremely discouraged. Most of Gen Z feels like they will never own a home, and that's very bad. And that it's basically a reflection of this centrally planned money supply, these centrally planned interest rates, failing people, failing young people, right, who feel like they will never catch up and never own a home. And so what are they doing instead? They're renting and they're buying Bitcoin. And that's just one area. That's just one example of where people feel discouraged in the current economic environment, and they're buying Bitcoin as hopefully a way out of that. And so, yeah, no, I totally agree. Bitcoin's price is a reflection of the downfall of global fiat. It's a reflection of society writ large rejecting the idea of centrally planned interest rates, rejecting the idea of a money printer that will not shut off, that always gets fired up whenever there's an issue with our economy, with our financial system. very much so, Bitcoin's price is a reflection of more people every single day opting out of global fiat in favor of absolute scarcity. So I would totally agree with you. And again, if we know that the inevitable path for the money supply is much higher, just because of the fiscal realities that the United States is facing, then we know that Bitcoin is just going to follow suit. Bitcoin is inevitable because we can't stop printing money. It's pretty straightforward. And if we know that where we are from a debt to GDP standpoint, from a deficit standpoint, we're on an accelerating growth trend. Then we know that Bitcoin is also going to be following that accelerating growth trend, right? And so things like $250,000 Bitcoin, $500,000 Bitcoin, $1 million Bitcoin, those things are much closer than they appear because of the realities of this accelerating debt problem that the United States is facing. So yeah, Bitcoin, while it is a proxy for the global money supply, its price is also, like you said, I like that analogy, a scoreboard for how bad the current system is and how it's failing.
Interesting. When we spin that a little bit further, how do you imagine the end game of that? We print more and more money, inflate the currency is hyperinflating more and more. Is that at some point where it gets so bad where the US dollar has to end and the fiat system has to end? Or do you see that always being a tool that governments and central authorities have, and we just make up new currencies along the way that a new generation has trust in, and Bitcoin is just an alternative currency to that?
Yeah. So I think, fiat is great, particularly fiat that's totally unbacked by anything. It's great for central banks, right? It's fantastic. It means that we have basically we can, by centrally manipulating interest rates, we can control largely the direction of the economy. We can hike rates into the stratosphere and drive the economy into the dirt. We can lower them below the rate of monetary debasement, and we could create this huge economic boom. To the benefit of the asset holders, of course, right? Anybody who holds assets are the people who win. So that's why younger generations are also feeling discouraged because they don't hold any assets. And so Bitcoin is the asset that they're deciding to hold. So global central banks, like fiat is great for them. I don't think they will go willingly. They will not drop this thing willingly. What they can do is strengthen their currency at the margin by stacking Bitcoin into a national reserve at their treasury, right? That's what the US is exploring. The US is already the preeminent world reserve currency. And so people will move away from these other currencies long before they will move away from things like the US dollar. A country like El Salvador recognized this years ago. They were very prescient in recognizing this. And Nayib Bukele is already stacking Bitcoin into his treasury with the recognition that, hey, chances are my fiat currency won't be used nationally for much longer. In order to bolster my balance sheet, I'm going to stack sats instead of that and allow my citizens to transact in it, and therefore make my country more attractive to capital allocators. I think that's going to be the trend for other countries as well, right? Other weaker fiats, currencies in places like Africa and Asia that are very rarely used. Bitcoin is going to be a way for central banks, if they want to make themselves attractive to global capital allocators as their fiat currency dies in the vine. That said, I think the US dollar will not be going away. From the standpoint of it being US treasuries being the collateral for basically all of global borrowing and lending, I think it's going to stay here for a very, very long time. Hopefully the next century, right? Because I love my country. I love the United States. And it's just the position that we are in. Even though fiat is dying, it's dying a slow and painful death. Citizens of all of these countries are slowly coming to realize the scheme that's going on behind the scenes of perpetual monetary debasement. They're buying Bitcoin. I think just all of that fiat death will bolster the US dollar at the same time that it bolsters Bitcoin. People are going to find very little utility in things like the Turkish lira or the Venezuelan bolivar, but they aren't buying Bitcoin instead. They're buying US dollars instead, right? And so as fiat dies, that's fantastic for Bitcoin. It just bolsters the United States' position as the dominant superpower, as the world reserve currency. The United States, our power isn't, like the US dollar, the colloquial term around the globe is the US dollar is backed by nothing. Well, no, it's actually backed by the US military. The US dollar isn't backed by the US military. It's backed by global borrowing and lending. It's backed by global capital markets, right? This several $100 trillion machine of borrowing and lending that's happening every single day, every month, every year. That's what's backing the US dollar. And as other fiat dies and people flip into the United States dollar, it just bolsters our position even more. Bitcoin stands to do very well right alongside that. So rather than Bitcoin and the US dollar being enemies, Bitcoin is the enemy of fiat. The US dollar is the king of fiat. As other fiat dies, that strengthens the US dollar's position, but it also strengthens Bitcoin's position. And so over the next several decades, that's going to be the path that we follow. A US dollar that's more widely used than ever before, but also as a result of people of Bitcoin's price going up, even more mass adoption, Bitcoin becoming a 20, 50, $100 trillion asset, the power of the United States government, the Federal Reserve, to set interest rates and therefore have this huge wand that it could wave and influence a lot of the economy, that's going to be taken away because the total stock of US dollars that it influences via setting rates, right, will be lower. And so even as the US dollar gets strengthened because of this dynamic of fiat dying, Bitcoin gets strengthened too. But I believe some of that power that the Fed has in setting and determining the cost of capital will be taken away. So that's kind of, it's a complicated thesis, but it's one that I'm sticking to, in that I don't think the dollar is going away anytime soon, but I'm also a massive, massive Bitcoin bull. And I do not believe the utility of global fiat, non-dollar global fiat, is going to be around for very long. I think as that goes away, the US dollar gets strengthened, Bitcoin gets strengthened right alongside it. And because the United States, and I've said this several times now, because the United States has the most free and open capital markets and the best individual liberties, a strengthening US dollar is actually fantastic for Bitcoin, right? Because it means that more of and as we become, the best country for Bitcoin companies to move to, it means that more miners are going to be here in the United States. More Bitcoin companies are going to be here in the United States. More people are going to move here because we're going to adopt the best policies for Bitcoin in the United States. And so Bitcoin and the dollar, rather than being enemies, when one does well, it's actually very good for the other one. So it's kind of a different thesis from what a lot of people will give, but that's what I believe is going to happen over the next several decades.
That's interesting. It seems to be the medium and long term, that story, and maybe very long term it might change, but I don't think I will see that in my lifetime. At least that's what I think. You said something before, also coming back to the strategic Bitcoin reserve for a second, that you think that there might be chances that he actually signs an executive order on day one that Bitcoin is actually there, the strategic Bitcoin reserve, those Bitcoins they already have. How high are those chances? I hear that from more and more people, and maybe as you're an American, I'm not. How big is Bitcoin in Trump's head actually? Like, do you know how important that is for his core voting group and stuff like that? Because it feels like maybe we see it too much of a Bitcoin classes the presidency.
Yeah, so I think if you take a look at what Trump was promising in his first run for president, basically everything he was promising, he at least tried to bring it to fruition. Obviously, you have the Congress, right? You have the Senate and the House of Representatives, who sometimes throw a wrench into Trump's plans, right? For example, he wasn't able to begin construction of the border wall until like 2018, 2019. And he was only able to construct basically as much of it as he could before Joe Biden went into office. It wasn't able to be completed. But at the very least, he tried to do what he promised to do. And so in the very same vein, even though he might not accomplish it, he's going to try. And unlike the border wall, right, there are many different ways to establish a strategic Bitcoin reserve that do not rely on Congress. And so I believe that there's probably a 70% likelihood that in 2025, some form of strategic Bitcoin reserve is created, whether it's just reestablishing what we already have as the SBR, whether it's that plus using the exchange stabilization funds in order to buy Bitcoin, or whether it's passing the Bitcoin Act in 2024. I believe that in some form or fashion, there's about a 70% chance that this happens in 2025 within his first year. If you look at a betting market like Polymarket, which was very good at predicting the outcome of the election, it predicted it months in advance, despite what all of mainstream media was saying. You can remove all human opinion from it if you just take a look at what markets are saying. Because at the end of the day, price is truth. When you have a huge liquid market that's saying this thing is higher likelihood of happening than another thing, they tend to be very right. And they tend to, over time, as whatever date is set for this event happening comes, eventually the market converges on what is actually going to happen. So if we look at Polymarket and just take away all human opinion, there's about a 30% chance that Trump creates a Bitcoin reserve within the first 100 days. The odds of that dropped on November 6th. They were about 60%. But basically, when this market was created, it was about 31%. And it's oscillated between about 45% and at the lowest, like 22%, right? So there's about a 30% chance he does it within his first 100 days. If you bring that out to all of 2025, there's about a 42% chance of it happening. So I believe that the market is really, it's not discounting the prospect of a strategic Bitcoin reserve enough. Markets are forward discounting mechanisms, right? So they price in events that they believe will happen into current day. But obviously, markets operate on imperfect information. They don't have all of the information out there. I think that if more people came to realize there are many paths to establishing a strategic Bitcoin reserve than the Bitcoin Act of 2024, which again relies on both parts of Congress to agree on this, and then for it to reach Trump's desk, which is a lot of moving parts that need to go right in order for this to happen. I think if more people understood there are other paths to this happening, those odds would be much more in the strategic Bitcoin reserve's favor. But because those odds are present and I know about them, I'm factoring that into my probability. I think that Trump cares pretty deeply about this. He's stated it several times. And I think that if one method doesn't work, he's going to try the other methods. And so I think within 2025, there's probably a 70% chance of this thing happening.
Interesting. So the strategic Bitcoin reserve would send bigger shockwaves than we think, because most people don't seem to. And I get that in the comments also. Because every time the topic comes up, people say, "Oh, you're a fool. It will not happen. Like never," and stuff like that. So like I get that feeling even from Bitcoiners. Most, I think, in my comments at least, think that it will happen. I should do a poll on that. I do every day a daily poll and a daily question, so that could be an interesting one for this episode. But yeah, I also think that it will send bigger shockwaves, especially through the retail and the as I call it, the normie land, because I overestimated what the 100K price movement did for the retail crowd. I was very dissatisfied with the small news coverage, the small surgeons of that. I felt the 100K was a bigger event than it actually was. Like, it was not celebrated a lot outside of Bitcoin. In Bitcoin, of course, we celebrated it. But how do you see that? Like, did you expect it more for that 100K milestone?
I expected a much bigger move for the 100K milestone, because I thought of it as, and you probably thought of it like this too, like a huge psychological level for Bitcoin. You hear Bitcoin is now a 6-figure asset, it's $100,000. All of a sudden people go, oh my goodness, I have to get a piece of this. But what you mostly saw was two things. You saw that the celebration was really relegated to like the hardcore Bitcoiners, you and I, the Bitcoin Twitter crowd, the Michael Saylors of the world. And the other thing was that people looked at $100,000 Bitcoin and they said, well, it's too expensive. I can't buy one of those, right? Because they just don't know that Bitcoin is divisible into 100 million units. And you can get, right now, 949 sats for $1, right? People just don't know that. If there was more education around Bitcoin being divisible into 100 million units, I think 100K would have been much more wildly celebrated, and hitting 100K would have just been like the spark that lit the fire that drove Bitcoin to 150, like very quickly. But because of those two things, because of unit bias and the fact that most mainstream media didn't really care, it wasn't as hugely of a celebrated event as it should have been, and it didn't do what it should have done for Bitcoin's price. Obviously, it's battling these macro factors, like I explained, but it didn't do what we thought it would do for Bitcoin. I think Trump is a whole different story, right? Trump is the most, outside of Jesus Christ, Trump is the second most popular person on the planet, right? And so the prospect of Donald Trump saying, all right, the United States is now going to be buying Bitcoin actively, or at the very least, the United States is now establishing a strategic Bitcoin reserve. That's going to be much more widely publicized, both on right-wing media and on left-wing media. CNN is going to be calling this guy a nutcase. They're going to be calling him insane. But nevertheless, they're going to be talking about Bitcoin, right? And that's fantastic for us, because you have basically everybody that wasn't in the know or didn't understand the importance of this hearing the news that Donald Trump, leader of the free world, is going to be buying Bitcoin with the United States money. All of a sudden, people's ears perk up and they tune in. I think Donald Trump passing a strategic Bitcoin reserve into law in some form or fashion is going to be much bigger news for Bitcoin than 100K. And so all of that price mania that we thought was going to come with 100K, it's going to come with the establishment of a strategic Bitcoin reserve, right? So immediately jumping up to $150,000, $200,000 in the prospect of the US doing this and buying Bitcoin, because he's going to send retail traders, institutional investors, companies, and other nation states into a frenzy to try to bid up as much Bitcoin as they can. And so that kind of huge bull market, manic loop of buying that sends Bitcoin all the way to 150, 200, 250 that we thought would come with 100K, I believe that that's probably going to come once we establish a strategic Bitcoin reserve, which I view as a pretty high likelihood.
Interesting, yeah. I love that. One more thing about game theory. What happens if Trump doesn't do those things, but the BRICS go ahead and actually do it, and the BRICS kind of see it as a chance? Or do you see it more of like America has to move for the other bigger states like BRICS to be incentivized? And if America now doesn't move, that it's very unlikely that the BRICS even touch it, because they're like, oh, like America also doesn't do it, or maybe we should also not do it. Maybe America knows something that we don't.
I tend to think that it's inevitable either way, because if the BRICS, the reason the BRICS countries are considering Bitcoin is not because the US is considering Bitcoin, it's because they want a hard currency to back their basket. That's why, right? And so because that's the reason, and gold isn't that currency, Bitcoin is the only other option. And so they're determined to move forward with this thing. Bitcoin is their only viable option. So if they do this before Trump, then that's going to drive Trump to do it, right? The inevitability is that BRICS does this one way or another, because they are determined to do this and skirt around U.S. sanctions, and the fact that the U.S. dollar has such a stranglehold on international trade for these foreign adversaries for the United States. That's why they're determined to do this thing, and Bitcoin is the only currency that can back it. And so I view it as an inevitability. I don't view its success as an inevitability, but I think that them buying Bitcoin to back their basket is an inevitability. And because of that, that will drive Trump and probably drive a Congress that will be united in this to establish a strategic Bitcoin reserve, because regardless of who you are, left or right, you don't want our foreign adversaries skirting around our trade policy. You don't want them avoiding our tariffs or our sanctions, because that means less revenue for the United States. And so if beating them means buying as much Bitcoin as we can to make it less affordable for them to back their basket of currencies, then you'll have a united Congress that moves almost unanimously to pass the Bitcoin Act of 2024 into effect, so we can buy that 1 million Bitcoin before these other nations can. So whether it starts with Trump is irrelevant. I think at the end of the day, the US will be buying Bitcoin in force one way or another, because its hand will be forced by this other group of nations that's going to be buying it regardless, because it's the only hard currency that they can realistically use to back this basket of currencies.
I love the game theory. It's just like a snowball coming to you, and you're like, yeah, like I have to jump on this. I love that game theory aspect of it. Before we come to the end routine and the close up of the podcast, I have one more thing that I was interested in while I was listening to you. What role does AI play in all of this market dynamics and Bitcoin adoption?
Yeah, so I mean, Jeff Booth has always said that Bitcoin, technology is deflationary, right? It should make everything less expensive, but it doesn't, because we have this accelerating inflationary force with money printing on the other end, where, we should be living better than, you hear this a lot, like it went viral on Twitter last week. We're living better than all of the kings around the world were, 500 years ago, 1,000 years ago. Why? Because we have technological abundance. I have this supercomputer right here. We're talking to each other over this supercomputer, right? We should be living fantastic lives because technology is deflationary, right? It makes the cost of living less expensive. It makes it so that you and I can drive gas-powered cars to go get a cup of coffee that's made by somebody that we pay them for, and then we drive back to our house that we own. That should be the way things go. But it hasn't been the way things go because of inflationary money, right? Bitcoin changes that. It's a better denominator for this increasingly technologically accelerating world. Bitcoin is the better denominator for that. AI is just the next evolution of that deflationary technology that brings about abundance to more people, and it raises the level of prosperity for everyone. And so that's how AI fits into it. It's simply another example of a technology that's raising abundance if we denominate ourselves in Bitcoin rather than global fiat. AI has been a tool that I've leaned on very heavily over the last year and a half since ChatGPT came out, especially ChatGPT 4.0. I use ChatGPT, I use Claude, I use Grok, I use all of them. They're fantastic for my day-to-day workflow and everything that I do. So it's this, just like other technologies, it's this fantastic tool for humans to use, but truly raising our living standards means denominating all of that technological advancement in Bitcoin instead of the US dollar. And so that's how I think AI fits into all of this.
For me, yeah, it's almost like almost more like Google the 5 years ago, where like if that site is not on, it's almost impossible to do anything. And even more than that for me, like ChatGPT was, I think, like 4 months ago or something like that, 2 hours down, and I was like, I will take a break now. I was like, I will wait till it's back on. It doesn't matter to work. I don't want to change my workflow now for 2 hours. But it's interesting how fast technology can come in our lives and just be so important in our daily workflows. That's amazing to me. Really cool. We have one question that I ask each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Yeah. The other thing you can learn from me besides Bitcoin is living a God-centered life. I'm a Christian. I'm a devout Christian. I have been my whole life. And one of the things basically the biggest thing that I tweet about that isn't Bitcoin or macro or markets or the economy or geopolitics is about Christianity. So one thing you can learn from me is trying your best to figure out what God put you here for, and then living a very Christ-centered life. That's the other thing you can learn from me.
Amazing. It's almost like, I think at the end of like maybe 5 years of podcasting, I will be religious. I was not at all when I started the podcast 1 year and 2 months or something like that ago, and I'm getting more and more religious before the guests. I see some patterns with the guests. Really cool. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And your question is, interesting one. If you were to land on Mars and you took the first steps on this new planet, what would you say?
I would say, God bless America, and I would plant the American flag on Martian soil. That's what I would do.
I love that answer. I could have almost guessed it. Really cool. Perfect. And thank you so much, Joe, for being on. Before I let you go, where can people find you, ask you questions, and reach out to you?
Absolutely. Yeah. So if you want to find me, the most active place that I am is on X/Twitter at Joe Consorti, the same way that you see it either up on screen or in the title of the video. You can also find me on YouTube. I made a YouTube channel relatively recently where I put all my X video content onto YouTube. It's very simple. Just search Joe Consorti in your search bar. And you can also find me at both of my company websites. So this big glowing sign you see in the background of me is Thea. It's the world's simplest Bitcoin self-custody solution. Basically allows you to create very simple, robust multi-sig vaults for your Bitcoin, eliminate single points of failure in your custody setup in minutes. No technical wherewithal required. Simply download the app and try it out. It's also live on app.thea.us. If you want to learn more about that, you can just visit thea.us. And the brand new company that I'm working on, which is even more interesting, is called Horizon. Basically, it's a way to diversify your home equity into Bitcoin. If you want to learn more about that, you could go to joinhorizon.com to learn more.
Really cool. Amazing. And yeah, I also put of as with every episode, the link of the Twitter of the guest in the description. So you don't have to search it. You can just click on the description link and you find your Twitter profile directly there. So thank you so much, Joe, for being on the show. Thank you so much also for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.